study fintech applications across the globe and the extent to which the domestic banking units are aligned with these applications and what has happened so far in Kuwait within the realm of fintech. Target audiences are banks, fintech companies, and regulators. So it involved secondary research, statistical modeling, as well as primary research, where we interviewed about 20 institutions, which includes banks and technology and fintech startups. It's a very ground-based research that we have engaged with. My big picture is going to be more bank-centric in terms of how fintech affects banking and financial services more specifically. It affects the payments and the security settlement, deposits, and we lend. It affects the way we manage assets, and also there are a lot of support areas that crisscrosses these three verticals. High mobile penetration will lead to a mobile technology shift by 2025. Second segment, of course, is the population dynamics. We're talking about a demography that is bulging in the middle, in the age group of about 20 to 35. 70% of them have an account with a bank. Imagine the world average is only 54% and Mena average is only 33%, and Kuwait is already about 70%. Government has also taken a lot of lead in terms of introducing the electronic transaction law in a banking world. It started with ATMs in 1960s, and then it migrated to internet banking, and then it migrated to mobile banking, and now we are talking about fintech. There are a lot of impact points, as we can see here. Profits will get redistributed, experience ownership will become more important from a customer point of view, the workforce will be more bionic. I think 10 years from now we'll talk about systematically important techs failing. As we know, Google, Amazon, Apple, underneath their growth, they are also morphing themselves into big financial services companies. The big picture is definitely moving, whether we like it or not. So we have only one option: move with it or get destroyed. When it comes to very specific applications of fintech, we're talking about four key technologies behind fintech. One is with data focused, and then you have on the other side the operational excellence that can really increase your user experience. And then you have front-end interfaces, and you have infrastructure enablers like clouds and APIs. So all the four key technologies behind the fintech are coming together and creating what is called as an open banking. Open banking, when it comes, it will create both supply side as well as demand side pressures for fintech. As Bill Gates correctly said, banking is required, banks are not required. It's the credit cards and SMEs that are most vulnerable for disruption, and they account for about 11% of the pie. There are two factors here to consider. One is the rate of adoption of fintech among Kuwaiti banks, and the segment which is likely at risk. So we can talk about a very anemic adoption rate of just 2% to a very vibrant adoption rate of about 50%, and depending on which adoption rate takes scale, so the amount of disruption will be determined accordingly. The first one talks about the interest yielding segment of Kuwaiti banks. The second one talks about the non-interest yielding, the fee-based side of the banks. We have developed our own formulas to calculate what could be the fintech adoption rate among Kuwaiti banks based on these scenarios. We also assess the fintech readiness of the banks. The role of regulators will become the key aspect of it. In the past, the regulators were more reactive, but today they are more proactive. In the past, they were more rule-based. Today, they are trying to be principle-based. Innovation, transition to knowledge-based economy, I think fintech is going to play a huge and important role in this pursuit for Kuwait. Are there any better solutions available than what is proposed by fintech? And Does it have a competitive advantage? Basically, we need to articulate and increase the awareness of the fintech, leverage it as a tool of financial inclusion, assure user trust. For the banks, cooperating with fintech will definitely provide banks with a lot of competitive advantage. On the fintech side, fintech companies, definitely it's their interest to cooperate with banks from a financing point of view, from a access to consumer point of view, and from a trust point of view. I think fintechs will be far better collaborating with banks.
Iman Rodan, the CEO of Zain, Kuwait. Why wasn't there any assessment or inclusion for the mobile operators in Kuwait in your study, despite the very clear relevance that you have presented and you have touched base very well in the research?
We thought that the TOR developed for the project was very specific on the financial services impact, especially the banks, which itself is a pretty huge exercise if you look at it. So telecom is another very big elephant in the room. So then that would have taken forever to really cover the ground that we have to cover. They operate on the supply side, actually.
How do you see possibility of a partnership coming in as a way to maximize the value?
As I said, it's a very big factor. The telecom influence in terms of what's happening in the fintech space is going to be huge, and it will require a lot of focused approach. Otherwise, it can easily get lost in terms of the size of the TOR that we already have. At the moment, I think it's pretty much open. From a fintech player's perspective, we see a lot of local stories more than global stories, because the MENA region is a very difficult region to understand from a global player's perspective. But once it gains scale and you have a couple of more unicorns coming out of the region, then you will see a lot of global impact on the local market. Two type of approach or an answer. One is that it's not easy to really go and get a view from customer because they are too big to target, unlike banks where they're just handful and you can go and get their view. And it is possible to go and get a view of a customer. It would be too time consuming and expensive, and it will have a very predictable result. So you have so many components of the value chain of a bank that can be commoditized and disrupted. So both on the cost side as well as on the revenue side. This is the power of technology. So you can no longer ride based on a brand image, but you have to be very alert about the fact that someone can just come, pick a particular component of your value chain and start coming out with a solution that will make this part very irrelevant for your business model. So it is very synergistic in terms of how it works, but at the same time there may be risks. What type of information can be shared, and what type of information cannot be shared, and what can one do with that pool of information, and what one cannot do with that pool of information. It's an idea that is very close to an impact that fintech can have, actually.